the taxation process for small professionals, the government has introduced a presumptive taxation scheme. It makes the tax filing process simpler and saves them from the hassles of writing the books of accounts, as well as from preserving the vouchers for expenses. 3 conditions need to be satisfied to offer professional income under a presumptive taxation scheme. Do you want to know all the facts of the presumptive taxation scheme for professionals under Section 4480A? Hello and welcome. I'm Namita, a tax expert at Clear. We are India's largest tax and financial services platform for individuals. To subscribe to our channel to support us, it is an ocean of finance and tax-related videos to easily search for solutions to your queries. Let us start and know some important facts of Section 4480A of the Income Tax Act. The scheme of presumptive taxation for professionals was introduced under Section 4480A of the Finance Act 2016 and is applicable from financial year 2016-17 onwards. Before 2016, the benefits of presumptive taxation were only given to businesses under Section 4480 and to the transporters under Section 4480. Specified professionals were specifically kept out of the scheme of presumptive taxation. Hence, the only option available for professionals was to compute their income under the normal system of taxation. You know, the normal system requires the professionals to maintain all books of accounts, maintain a copy of invoices for all expenses, and in some cases get their tax audit conducted. Yes, imagine a small professional with basic earnings has to maintain accounts and keep all the bills for expenses, etc. Hence, to simplify this, the presumptive taxation scheme was introduced under Section 4480A in Finance Act 2016. In case a person adopts the provisions of Section 4480A, income will be computed on presumptive basis, that is at 50% of the total gross receipts of the profession. However, such a person can declare income higher than 50%. In other words, in case of a person adopting provisions of Section 4480A, income computed at 50% of the gross receipts shall be the net income that will be offered to tax under the head Income from Business or Profession with respect to such professional income. Section 4480A is applicable to all assessees being a resident in India, engaged in the profession referred to in subsection 1 of Section 44A of the Income Tax Act. The assessee needs to satisfy all these 3 conditions to be eligible under presumptive taxation scheme. The first one is, the assessee should be a resident individual, HUF or a partnership firm, but not a limited liability partnership. The next condition is the assessee should be engaged in a specified profession under subsection 1 of Section 44A of the Income Tax Act. And the last condition is that the gross receipts should not exceed Rs 50 lakhs. These are the 3 conditions that the taxpayer should satisfy to offer income under presumptive taxation scheme. The taxpayer is always in dilemma to know whether his occupation is a profession or a business in terms of the Income Tax Act. Let's first understand which activities constitute a profession and which do not. In case of a profession, the definition given in the Act is very much inadequate and it does not clearly specify what activities constitute a profession. As per the generally accepted principles, profession involves an exercise of intellect and skill based on learning and experience. For instance, an auditor carrying on his practice, the lawyer or a doctor, a painter, an actor, an architect or sculptor would be persons carrying on a profession and not a business. Moreover, as per the Income Tax Act, the profession includes vocation. Vocation refers to any work performed on the strength of one's natural ability for that work, and a person earns his livelihood from such activity. For example, writing of articles in magazines, tailoring, repair work and activities which does not require any substantial intellectual input are covered under vocation. Any gain or receipt arising out of vocation is certainly taxable under the head Income from Business or Profession. But one thing you need to keep in mind is only certain types of professions are allowed under Section 4480A. Under Section 4480A, Professional services means services rendered by a person for carrying on legal, medical, engineering or architectural profession, or the profession of accountancy or technical consultancy or interior decoration or advertising or such other profession as is notified by the board for the purpose of subsection 1 of section 44AA of the Income Tax Act. The Central Board of Direct Tax has notified professions like authorized representatives, flimmarters, certain sports-related persons, company secretaries, and information technology. An authorized representative is a person who represents another person for a fee before a tribunal or any authority constituted under any law. Further, the film artist includes a producer, editor, actor, director, art director, dance director, singer, lyricist, story writer, screenplay or dialogue writer. In short, film artist means any person engaged in his professional capacity in the production of a cinematograph film, whether produced by him or any other person, as a singer also. I hope that I have given you a detailed analysis about Section 44 ADA. Please comment clear if the provisions of this section are clear to you. Kindly remember these points. Firstly, if you have to pay advance tax, instead of estimating income and paying tax each quarter, any person opting for the presumptive taxation scheme under Section 44 ADA is liable to pay whole amount of advance tax on or before 15th March of the previous year. The second point to remember while opting for the scheme is the assessee will be deemed to have been allowed the deductions under Section 30 to 38 of the Income Tax Act. Accordingly, no further deduction under those sections shall be allowed. The next point is that the written down value of any asset used for the purpose of profession of the assessee will be deemed to have been calculated as if the assessee has claimed and had actually been allowed depreciation for the relevant assessment years. Further, with respect to maintenance of books of accounts, the law states that the assessee will not be required to maintain books of accounts under subsection 1 of Section 44A and get the accounts audited under Section 44AB in respect of such income. However, the audit would be required if the assessee claims that the profits and gains from the said profession are lower than the profits and gains deemed to be his income under the presumptive taxation scheme and his income exceeds the basic exemption limit. So this is all about presumptive taxation scheme for professionals. If you have any questions related to income tax, please comment below. We will reply to it as soon as we can. I hope this was helpful. Thank you for watching this video. Stay tuned for more updates. Take care and goodbye.